what we're seeing here, again, it's more of the same, but it just seems to be getting worse. It's kind of evident that they're paralyzed. They can't do anything meaningful with regard to raising rates. And every time the 10-year, for example, starts to creep above 3%, we start to see the market fall under pressure. The market's been under pressure since the Fed opened their mouth. They are trying, I believe, to keep some type of a narrative going that they're in control. As a matter of fact, they put out a statement after that trying to ease investors about, oh, don't worry about inflation. We got it under control. That to me is a big tell that they do not have it under control. Why do they have to come out and say it? Unless they're worried. In my opinion, they understand what's going on here. They have no clear exit from what they've done to the financial markets, and I'm talking about the distortions that exist. They are literally off the Richter scale right now, and it is going to correct. But the Fed, in my opinion, has been this way for a long time, is going to attempt at least to keep this propped up until they can't. And are we seeing that now in the market with all this massive volatility, with the big sell-off after they open their mouth? Who knows? Only time will tell.
Now, you recently have talked about how you really think that stocks are in trouble and that we're just seeing a lot of market volatility. Can you expand on that?
Oh, absolutely. Look, we've been here before. This is nothing new. And this is what I think people need to understand. It has a lot to do with the yield curve, which continues to flatten out, and the valuations in the market. The last time we were in this same spot was 2008, just at the top of that bubble. The time prior to that was at the dot-com bubble. So we're just seeing history repeat itself. The markets run in cycles. So, I am more than certain there's going to be people who hear this and think, oh, no, it's just never going to happen. Well, they thought the same thing in 2008. They thought the same thing during the dot-com bubble. This is recent history, but you can continue to go back every 10 years or so, and you'll see a repetitive cycle. However, this time is much, much worse than any time before it because the debt is so much worse, and the effort that has been put into reinflating a housing bubble and reinflating a stock market bubble by the Federal Reserve this time is unprecedented. So what does that mean? The potential for a greater hit to the financial markets, to housing, is a lot greater than it was before.
Right, and you mentioned the yield curve inverting. It looks like, so basically what that would be is if we saw long-term interest rates fall below short-term interest rates. So why do you think that's going to happen? And also, why would that have a negative impact on the markets?
Well, if we use history as a guide, we can say every time that this has happened, the last two times, has ended in financial catastrophe. The yield curve flattening out, and there's some people on the mainstream, of course, that are going to say this is not true. However, if history is, again, any guide, it's pointing towards an economic slowdown. When people don't want to hold debt for a long period of time, you get that inversion, and that says something. So these guys on the mainstream, they can twist it any way they want. But again, if they just look at history as a guide, they will understand that it's in our face. But they don't want people to know that. They don't want people to understand that distortions in the market are really unprecedented here at this point. And who knows what the true value of debt is in this environment? No one knows what the true value of anything is in this environment of cash being printed out of thin air, added to a digital screen, the central banks buying everything in sight here, suppressing the price of gold, suppressing the price of silver. The London Gold Fix, you know about this. It's a real entity. It exists. I urge people to look it up for themselves if they believe it's a conspiracy that gold and silver prices are suppressed. Well, the London Gold Fix. I mean, it's common knowledge, but it's never addressed. Anyway, so that's where we're at here. But the main issue, what people need to understand, is this is nothing new. Where we are now, we've been here before, and it's going to melt down at one point, and then it's going to get propped up by some mechanism again. So it's just a big cycle that just repeats over and over again. And that's the way I see it.
Now, with respect to gold and silver, as you were talking about, can you give us an update on where gold and silver prices have, been in maybe the last month and where you see them heading in the short term?
Well, it's interesting. If you look at the price of gold and silver right now, and even cryptocurrencies, they're all catching a pretty good bid here as the stock market is falling under pressure. Now, this is a scenario I've outlined for years. I said at one point here, when the risk on trade is no longer working, you're going to see cash move into other places. It doesn't go to money heaven. It's going to simply look for another avenue to go to. And I believe we're still going to see a huge amount of cash go into commodities, especially those that are being suppressed beyond anything I think anyone could ever have imagined. Gold and silver are priced in dollars. Meanwhile, the global debt, the dollar being a unit of debt, has exploded, unlike anything we've ever seen in history. Meanwhile, price of gold and silver is really low in relation to that. It's incredible. But anyway, that's what people need to be, in my opinion, in an environment where we get a sell-off in stocks. You want to be in commodities, especially silver, gold. And I also believe people need to be in cryptocurrencies here. I know there's a lot of people out there who hate them, but there are a lot of people making a lot of cash with it. And I believe in them in this environment, yes.
So why specifically do you believe in cryptocurrencies?
Well, because where are people going to be? You can't be in debt. Debt is insane. The market's going to eventually correct to a fair value. So you don't want to be there either. You want to be in dollars that are being diluted into oblivion, despite the blip that we've seen on the radar screen. We've seen the dollar catch a bid recently. You can't be there either. So it's either going to be commodities or cryptos. Where else you're going to go into real estate? The housing is in a bubble too. Although I just recently bought a home, that's the truth. But I don't plan on moving for a long period of time. I don't have any debt. I don't care. But that's why I believe we're going to see commodities and cryptos start to catch a bid as the risk on trade becomes risk off.
No, it seems like you're thinking that cryptocurrencies are maybe less risky. If it's going to be, if you're going to be bullish on them when there's a risk off trade, it seems like people would run into them because they think it's less risky. But I was just interviewing Mark Faber, who was saying that he thinks that blockchain technology is here to stay, but the individual cryptocurrencies he's very hesitant on. He thinks 90+% of them will fall to zero. What is your perspective on that? It seems like if that's right, then cryptocurrencies are actually really risky.
No, the cryptocurrency is not a unit of debt. It's period. The dollar is a unit of debt. And again, investors are always going to look for it. Look, down the line here, it absolutely may happen. I have no idea, but I can tell you that in this environment, when I'm talking, I'm referring to where we are. In this environment, where are people going to put their cash? I guarantee you not everyone's going to put them into commodities. That is a guarantee. So they're going to look for other things to put them into. They're going to put them into art. They're going to put it into, musical instruments, other things to try to preserve wealth. And I believe, again, in this environment that they're going to go into cryptos. I mean, just look at what's going on here lately with regard to cryptos. I've been calling, I think, more accurately than most people out here, the price action of cryptos. As a matter of fact, I just put an article out 2 days ago with regard to Ethereum. I said, look for a spike higher. Bam! In the past couple of days, up like $100. I put my price target on recent price target on Bitcoin was 10 grand. It hit 9,800. Then we pulled back. Then I told everyone to sell Bitcoin when it hit 20,000. I got laughed at by a lot of people. Oh, no. What happened? Bam! Almost to the dollar. I called that one as well.
I'm interested to know, do you think that all cryptocurrencies will do well, or is it just specific ones?
No, not all of them. Of course not. It's going to be, you can't just be throwing darts at a board here. I would be looking at things like, I personally own Bitcoin, I own Litecoin, and I own Ethereum. I own Steam too, but that's a whole other thing, part of the Steemit platform. But those are my current holdings. I believe in these three. Of those three, my favorite is Ethereum. For a multitude of reasons. But this is something that is not going to go away, in my opinion, as far as I can see right now. Will these things at one point go to zero? Sure, so's the dollar. So pick your poison here. They're committed to killing the dollar. They're committed to diluting the dollar. We understand this. We're starting to see inflation, although the Fed is saying, "Oh no, not really." And if we do, don't worry, we can take care of it. Yeah, sure you can. What people don't understand is we exist in an environment where the Fed has gone absolutely bonkers. Printing these things out of thin air, adding to a digital screen, and we still have around the same amount of goods. You cannot stop all of these extra bills in whatever form they exist to chase the same amount of goods at one particular time. It's going to happen. So we need to keep our eye on that. So again, just going back to alternative investments, if you cannot be in debt, the dollar being a unit of debt, if you cannot be in stocks, cash is going to simply look for places to go. Whether or not cryptos are tulip mania, I could not possibly care less. All I know is for now, these seem to be performing well. So I'm not saying people are going to grab these and pass them on to their great grandchildren. Maybe they will, maybe they won't. But for now, this is where people need to be. Commodities, gold, silver, these prices will be realized their actual value at one particular time. I don't care how much rigging they want to throw at it. I don't care what they want to do. I just want, with regard to cryptos, I want Wall Street to keep their damn hands off of it. We saw what happened when the futures started trading. I warned everybody what would happen, and I was 100% correct on that. So as long as Wall Street keeps their hands off of cryptos, I'm going to keep my hands in them. Just like gold, just like silver. I also own palladium. I own platinum as well.
Now, still with respect to cryptocurrencies, you were saying that you don't really care. Maybe it is another tulip mania. Maybe it's a huge bubble, but if you can still make money, then go for it. And I guess my question to you is, in any bubble, you can make a lot of money, right? But you have to time it correctly. You have to sell at the right time. So what kind of indicators will you be looking for in cryptocurrencies that'll tell you, okay, now this is where we're topping out?
Well, number one is I'm going to watch the price action. It's very simple. Just look where the prices are going. And I'm not talking on a day-to-day basis. I'm talking over several weeks here. And then, for example, let's say you're holding Ethereum, for example, and you're watching the price action up, 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 up. And all of a sudden you start to see a pullback. What's wrong with this is what I told people to do with their freaking Bitcoin when it hit 20 grand. I told them, I said, sell it, lock up those profits for a little bit, put it in another asset for a little bit. You can always go back into it. Oh no, we're going to hodl. We're going to do this. You know how many people wrote to me and said, Greg, you have no idea how much I wish I would have taken your advice? They didn't. People stayed in. They watched it melt right down. What did it hit, 6,000 or 5,800? I forgot what it went down to at one particular time. They could have locked up those profits and then reinvested, and then look where they have been now. I mean, the amount of cash would have been incredible. But people don't do that, and they're going to do the same thing with the stock market, unfortunately. They're going to hold on all the way down. But it's pretty simple. Watch the price action. If you're a chartist, if you know how to look at a chart. As a matter of fact, I put up a really incredible chart right on my website, traderschoice.net. You can watch the price action on a chart. You can put in Bitcoin, Ethereum, Litecoin, any ticker symbol. Just put it in there. I already set up the whole chart for you. So it could not possibly be easier for people to use. Silver, gold, anything. So that's the main thing. Just watch the price action. You don't have to time it to the day. You don't even have to time it to the week. So you have a margin here. So people don't have to worry about, oh my goodness, I got to sell today. Oh my goodness, I got to buy now. No, absolutely not. That's when you're going to get yourself in trouble. You can't think like that. You're never, ever, ever going to be so accurate with your timing that you're going to nail it down to the minute. Maybe you'll be lucky enough to get it to the day or to the week, maybe even to the month. But you're never going to get in or out of a price of something at exactly the right or the best price.
All right. Well, Gregory Mannarino, thank you so much for joining us today. Before we let you go, are there any last thoughts you'd like to add, and where can our viewers find you online?
Yeah, I would say go to my website, traderschoice.net. Everything about me is right there. I have all kinds of free stuff for people. That charting system is there. It's free. It's absolutely free. No signups, no anything. Start utilizing it. Watch the price actions of these things and consider what I'm saying here. Understand, where are you going to be, people? You want to stay in debt? You're nuts. You want to stay in the stock market? Well, we'll see how that plays out. Once that yield curve inverts, I think we're really going to start a countdown. I still believe we're going to get an inversion. I've been saying this for years. And that spread between the 10 and 30 continues.